This is the version that can signal the most out of the three, and I only recommend it for those who can apply their own analysis to help filter out a lot of the signal. Welcome, and in this video I'll be going over everything case 1 for Outback. This is the version that can signal the most out of the three, and I only recommend it for those who can apply their own analysis to help filter out a lot of the signals. Like I've said in the intro video, this is as close to the manual version of Outback, with the main difference of having to wait for the higher time frame stochastic confirmation candle to close, which can slightly slow things down at times. If you're interested in seeing examples of trading this on a lower time frame like the 1 or 5 minute, then I recommend heading over to the TTF Discord and navigating to the Outback channel. From there you will see the pinned messages and click that, and by the time you're seeing this video, the next post that will be pinned will be a video of Carl, and he explains how he trades manual Outback for those interested in viewing that. A lot of people have been interested in seeing what he does. Carl's been finding a lot of success on the 1 and 5 minute, but also he's been trading this on higher time frames as well, which I'm going to go over soon. So watch this video. It's going to be extremely good. If you're on your phone, then head over to the Outback channel and then click the title of the room. And then from there, you should see in kind of the top mid area taskbar a pin section as well. So getting back into case 1, there are many time frame combinations and settings you could try. If for some reason you want to slow down a lot of the signals, maybe you're seeing a lot of consolidation here, while default is 55, 77, 77 for the ORSI, it is still valid signals of the original settings, which is 233, 89, 144. That slows things down. As you can see, it slows things down and gives you kind of a different approach of signals. So if things are a little fast, you could try these settings, but universally these settings, which Carl actually goes over, is pretty good. Also for the simple moving average length, some people like 55, some people like 21. It's personal preference, so I would test that for yourselves. But as for different time frame combination scenarios, if you're trading the 1 minute, then I'd recommend probably the 15-minute stochastic. If you're trading the 5 and the 1 hour, if the 1 hour is a little slow, as you can see in case 2, we do use the 15-minute, but you could try out the 30 or the 45-minute. You won't have these on default, and so what I recommend here in the top by your time frames, you have a time interval, and if you select this, let's just say we want to add the 8 hour, because we don't have that, we come all the way down at the bottom, highlight this, select 8, change it to hours, and then add. And then from there, the 8 hour now pops up on our time frames. And when we go back into the drop down for the higher time frame stochastic, we now see that 8 hour time. So you can maybe try the 30-minute or 45-minute on the 5-minute time frame if the 1 hour is too slow. Moving on, if you're trading the 15-minute, usually anywhere between the 1 and 4 hour. 4 hours kind of default, but maybe 2 and 3 hour could be a nice sweet spot if you test it. If you're trading the 1 hour, recommend 12 hours, maybe 8 hours, but 12 hours is a good sweet spot. Again, you'll have to add this into your time frames. Then going to the 4 hour, either the 1 or the 2 days could be a nice sweet spot. And then we haven't really tried anything other than the 4 hour to like the 2 day. Maybe you could trade the daily to the weekly, but was pretty slow swing trading. Not saying it can't work. You may be able to, but interestingly enough, what I want to do is go over the 1 hour, 12 hour scenario, because I think it's pretty interesting. So I'm going to keep all this the same. I'm going to switch this to 12 hour, and then I'm going to go to the 1 hour time frame, and we're on GU. And so a simple way I want to go over this, if you just scroll out, as you could see here, we are basically just stuck in this zone for the longest time now. So we're kind of bullish in the higher time frames if we go on the 4 hour daily, but technically this would be our last lower low that was broken. So we're probably bearish in this scenario, but scrolling through this large of a transition, it's kind of too big. And so what I like to do personally is go and look at it at a monthly approach if I'm on the 1 hour. And so from seeing this, we had a huge dump off, and then we had a retracement up. And so what I'm looking at is this huge dump literally broke this low. And so now we're bearish from this huge move, right? And so dependent on if you're just looking at the 1 hour, you could see your lower high here, or you could potentially see your lower high here, because you could argue both scenarios. It comes down to personal preference. If we're looking at structure breaks, this breaks here, and this is our new lower low. And depending, from a macro perspective, this would be the lower high, but you can also consider this a potential swing to break. Doesn't matter. But if we're looking at the entire move, what we would do is fib out that entire move that we just saw, right? And then from this perspective, price came and it retraced all the way back to here. So from this instant, we are still in a bearish mindset, right? And so if you want a counter trend trade, this is what I would recommend on this 1 hour, 12-hour setup. We had this huge move up, and so I would actually plot the bullish move. And in this case, as you could see, from this low all the way to here, because in this instance, if you would consider this like kind of a micro lower high, then technically we did flip bullish in this case. But if you're looking at it from a macro perspective, we are technically still bearish. So it just depends on perspectives here. And so from the macro perspective, we do retrace here, so we could see a continuation to the downside, which we do. And then from the case of the bull side, we actually get our retracement all the way down to the 70, 78 level. This is called OTE, optimal trade entry, in the terms of ICT. Pretty decent concept. I like the idea of a deep retracement of this. This gray to black is 61% retracement, and then this green zone is 70 to 78. So comes all the way back down here, and we get our first outback signal here. This is at 1600, and I'm in Chicago time, so that's literally the market rollover. So I'm not looking to trade there. So our next signal would be at 9 o'clock. So this would be a potential good entry to trade. Because as long as price doesn't break all the way down here, then we're technically bullish looking at the reversal side of the we're micro bulls, but macro bears, if that makes sense. Might confuse a lot of y'all. I'll have some simpler examples soon, but just kind of want to get y'all perspective of this, of trading kind of the counter trend into the actual trend. And so in this example, we get the retrace for the bulls, and we don't break this, so we're still technically in this macro bearish trend. We get an outback signal print once we get this bullish retracement. So I would cover your lows, and basically what I would look to do is at least cover the highs that form this retracement, or look in this area of the deep retracement of 70. Anywhere between here, basically this zone, is a good place to target. And as you could see here, you actually enter in the trade and you win that bad boy, which is nice to see. Also, if you are basically looking from this perspective, we're obviously bullish, right? And so we get our retracement here. And if you want to play around in this vicinity, what we can do is look for even more retracement plays and retest off the moving average. In this case, it doesn't come back to our 61, so it goes a little bit higher. We get that retrace here. So it's two retraces in one, as well as there is a candle imbalance, aka a fair value gap, into a nice deep retrace on this move here. So a good signal. From there, we continue going up. We're making lower highs and we're making higher highs, right? Or we're making higher lows and we're making higher highs. And so in this instance, this will be our high here. Price doesn't retrace the 61. We move it up a little bit. It doesn't retrace the 61. We move it up a little bit. And now it retraces all the way back here. As long as it retraces all the way back to 61, then it's sound. And from there, we have another entry. This will be a London entry. And you can look to, again, place your stop loss below the lows and then target anywhere in this vicinity. Another good trade from the 1 hour time frame. So yet again, price kind of retraces here. And so now this is our low and that's our high. Price retraces yet again to here. We get another outback signal, cover the lows, and then we'll look to anywhere in this vicinity. It's not that big of a trade, maybe a 1.6, but at the end of the day, you get about 3 trades trading back into the macro bearish side. 3 wins, pretty decent trades, about 3 and about 1.5. So good rewards. And that's 3 trades. Not saying you took all 3 trades, but that's 3 trades within 5 to 6 days. And so the 1 hour time frame isn't all that slow at times, right? Like you can find a good amount of trades, and this is just looking at GU from these 5 or 6 days. So just wanted to throw out the higher time frame aspect, since Carl is basically covering a lot of examples of the lower time frame aspect. And from there, I want to make an imaginary strategy to give y'all an example of how to go about using case 1, because case 1 is more of an execution entry trigger. It's not really, you have the higher time frame CM stochastic, but it gives so many trade opportunities to where you need something that helps filter and gives you an idea of if you're bearish or bullish on the day, and then from there, like when you should execute. And so I came up with this. In this example, I went over a few scenarios of actually trading Bitcoin on the 5-minute, but we have a general higher time frame bias, and then we have a trading time frame trend, identifying the trend, and then from there we're executing on outback case 1 signal. And so not only will I be doing Bitcoin, and this can work on Forex and this could work on NASDAQ as well. I actually got this data from NASDAQ, but I wanted to try crypto just to try something new, maybe some shock value. But anyway, our general higher time frame bias is the lunar cycle, so moon cycles. And so just as general notes, from the first quarter to the third quarter moons, we'll be looking for longs. And so you'll note the dates of the moon cycles, and we're going to offset it by 3 days. What that basically means is a lot of the banks and a lot of the big money know about these cycles, know that people are more excited during full moons and less energetic during new moons. And so they like to front run these cycles. And so what people have said is if the new moon is on the 15th, let's say, we'll offset it by 3 days and pretend the new moon's actually on the 12th. And so then if the next full moon's on the 30th, we'll pretend it's on the 27th, so on and so forth. And like I said here, note the dates for the full moon cycles, but you don't have to. Because if you come to indicators and type in moon cycle is by InSilico, which is this indicator here, if you go into the style tab, all you need is the first 4 on. You can take everything off, right? So we already know 2 weeks out of the month, we are only looking for longs, and that literally helps our bias tremendously because we don't have to think about it. We know we're looking for longs, and we're just waiting for 5-minute trends to enact that. And so for a trading time frame trends, we're simply following market structure, higher highs, higher lows, lower highs, waiting for bearish breaks to the bullish side. And from there, we pull a Fibonacci from the low to the high of that break of bearish into bullish, wait for a retracement, and then simply execute on case 1 out back. Seems very, very complicated, but it's not. So I'm going to show you. In this case, I basically use the last 2 first quarter to third quarter cycles. We're actually currently in one. And as you could see, today is February 26th. I don't know what happened, but Bitcoin's going crazy right now. It started at 51,700. Right now it's almost at 55K with a new all-time high for this year. Anyway, let's start in December. And so I'm going to just use the replay tool so we can go all the way back. So what I did here is I marked a zone of the entire body of the first quarter moon. As you can see, I offset it 3 days. So with the indicator, it says it's on the 21st. I marked the 18th. So I marked the body zone, and then I marked the high and the low that the candle formed. And that's December 18th. So when we go to that day, we are looking to trade Outback on the 5-minute time frame. As you can see, Outback is forming lower lows and lower highs. You've got a break here, but then it broke down, back down again. And this is our area. So from basically the 17th at 6 p.m. my time, Chicago time, we're now looking for longs. We got another break down. We got a lower low here. So this would be our lower high. That lower high was broken. So Sunday, the 17th of December at 6 p.m. my time, so Chicago time, we were now able to look for longs. Prices still making lower lows, lower highs. This was our last lower low here. It broke here, so the high, last lower high was up here on the 5-minute time frame. So just to draw everything out, this was our last lower low that was broken here. This is our lower high, and then from here it was broken. Our last lower high was broken here, and now we're bullish. So what was the entire swing move on the 5-minute that broke this last lower high to form bullish? Well, it started from here and it ended here. So all we're doing is drawing a fib from the swing, the recent swing that broke this, all the way to the swing high. Now, what we want is, in our second case, our trading time frame trend. So now that we're bullish, we want to wait till it at least comes and hits the 61 retracement or the 70. It doesn't matter. It can hit either. So we had the Outback signal that formed off of the entire swing that broke this lower low. So maybe you're just looking for a retracement now to get in, which could be here. Or we follow the rules that we set out. We want a retracement and then an Outback signal, which we get here. And ultimately, what we get is a pretty decent trade. What you could do is, since we're still in the first quarter moon day, offset by 3 days, you can literally hold this until the end of the day, which you get about a 2.5 on this trade or a 3 on the other. Maybe you have a fixed reward, maybe you trail. It's besides the point. That's personal preference. All I'm here to do is show you how to establish your trends and how to execute the trades. As far as targeting, that is completely up to you, but you could just wait till the end of this day and just get out or trail. Anything in that regard is good. So since we had this full retracement, we obviously broke above this. And so now our next trade, what we'll be looking for is what was the next Fibonacci? What was the next swing that broke this? Like what swing basically caused the break of this bullish fib? And as you can see, what recent swing caused the break of this last higher high? So basically this was the last low that caused the swing up until here. So we simply just fib it out. And as you can see, price comes all the way back down here. We get that retracement. We get our outback signal here. And you could just target the high or trail fixed reward. At this point in time, you get about a 2.5, almost a 3, but this is obviously hindsight. But at the same time, maybe you go for a 2 fixed reward, maybe you take partials, whatever it is. And it's literally just nonstop. We're just going to continue this until it doesn't work. And it's as simple as that, right? What breaks this higher high? Well, our higher high is broken here. And what was the low that caused that break? Well, it's all the way down here. So you draw your fib from here to here. At this point, it'll be from here to here. Price never comes back to justify that 61 retracement. So if it goes higher, we can move it higher. And this seems to be our high that we have here. We get our retracement here, right? It hits the 61. We never get an outback signal to enter the trade. We never get a long. We only get shorts. And like I said, we're only looking for longs between the first and third quarter. It is also nearing a bull run. I do not want to short Bitcoin. I'd rather just long it, wait for the dips, and get in at good prices. So that's kind of another thing too there. And so in this instant, we had a huge drop off. You can make the argument that you never get this trade opportunity because it depends on what you would consider the lower high in this instance. So this was our last lower low. It was broken here. So you could say the lower high was here. And then some people may say this is the lower high to this break, or this is just a continuation of this. So depending if you consider this lower high, you would get an entry again. Like we said before, this was our low, but then this retraced here. I could show that really quick. If we fib this, as you could see, it taps the 61, so therefore we're not worried about this anymore. This is our new lower low that basically broke through here. And once we get this bullish fib, we finally get our high. Price comes, wicks off the 61.8. Then we get our signal, and then now we can go long. Where will we target? We could look to target the macro bear side of things and look to target this 70. You also have some candle imbalances here. So it's a good area to target. If you would go consider this the lower high to this lower low, then you wouldn't have gotten a break up until here, and maybe you would look to trade this. You see this is like basically the outback signal that forms the break here, and you basically get this lower high. This lower high break now becomes support, and you could look to use that as an angle to take trades as well. So at this point, this is where our third quarter moon offset is, and this will be the last trade. We kind of had a tank kind of similar to here. Price completely dumps. Price comes up here, and we see this huge wick, right? This huge wick is completely bullish to me. We don't quite get the lower high break, so like I said, this may not be another entry opportunity. That's completely fine. But we get a huge wick, and that's completely bullish to me. I draw the fib from this low all the way to the high that it creates. It comes down for that deep retracement. We get our outback signal, and we are good to go. We target the macro bear side of things, and we get a pretty good trade, a 1.8 trade. So between these 2 weeks, we would have had 1 entry, 2 entries, maybe 3, maybe 4, depending on where you view your lower highs, which is completely fine. So these 2 trades, you may not have seen anything. Maybe you would have gotten the second one off of the lower high support, now form support. But at the very least, you would have got these 2 trade opportunities in 2 weeks. I mean, that's a good, we would probably get 1.5 here, and we get about 2.5. That's 4% in 2 weeks, which is not that bad if you've only got those 2 trades right. So this is what I mean by forming your bias and forming a trend on the higher time frame going into the market. That way you have an idea of what you're looking for, because that makes your life so much easier if you can go into the market as objective as possible and know that if this and this happens, then I'm only bearish, I'm looking for shorts. If this and that happen, I'm only looking for longs. And having that mindset makes trading Outback and all the other TTF indicators really easy, because now you can use the indicators as an execution trigger to your bias that you have found. So I hope you found value in this, and I'll see you in the case 2 video. What's up, guys? So I want to expand more on case one for the new Outback version. As you may have seen in the education center going over case one, I went with the approach of going out of left field where I chose to look at crypto, so Bitcoin, and also chose to use lunar cycles, something very objective, using the moon's cycles, whether it's full moon, new moon, first quarter, third quarter. But in this video, I want to go more of higher time frame route, kind of more traditional, what you like to see, and kind of give an objective approach, you could say, to this as well. And so what we're going to do, I'm going to just zoom through a couple of Forex pairs, and we're going to go from there. So first thing that I'm going to do is determine our trend. Not even have Outback on, and you could do this with any of the other indicators as well. So in this case, this is the macro kind of time frame. This is the macro side of things. Are we macro bullish or are we macro bearish? And then we go from there in the micro, aka like our trading time frame. So there could be certain scenarios where you are macro bullish but you're micro bearish. And so like you can kind of play those sides of things too. But let's not get too fancy. It's nothing complicated. All we're doing is identifying higher highs, higher lows, and lower highs, and figuring out what is our last move, and then from there drawing a 4-hour Fibonacci and waiting for a deep retracement. So let's get this started. Scrolling out extremely far with AU, I'm just trying to see a general direction. And so obviously closer to price here, you can see price went up, price is going down, and then more recently price went down, making lower lows and lower highs. But then ultimately from about the end of last year, 2023, you could see price made a resurgence and formed a higher high from this higher low and has been going up higher ever since. And so this is where I'll basically start, and I'll draw lines from here at the beginning. So this will be our higher high and this would be our lower low, because this was our last lower high to this lower low, and then from here this swing broke this and formed this high. And then all we're going to do here is wait. So if price breaks this point, we're bullish. If price breaks this point, we're bearish. And at this point, you can see we formed a new higher high. This became our lower low. And then we're constantly going to just be shifting this every time we get a higher high to higher low. Price breaks this, and we can see this is the first time we actually turn bearish. Then we turn bullish again, and then so on and so forth. So it gets to the point where I would say this would be our last higher low to this higher high, and it's broken, and we've been bearish basically ever since. And so we can draw it all the way down here. This would be the last lower low to this lower low. And so where was the high? The high was here. We get another break, and then where was the last lower high? So this is the last lower low here to this, and it'd be here. We get another lower low break down here. This is our lower high. And then, okay, now we know that we are bullish, right? Because this was the last higher high that we had, and this low helped form this entire move that broke this structure. So now that we're here, what we'll do in current time is draw a fib from the low to the high. And I've customized my fib a little bit. As you can see, I have the 0, which is black with 0 opacity, the 0.618, which is dark gray. So this dark gray with 0 opacity. The 0.79 is green, 0 opacity. The 1 is black, and the 0.7 is black. This allows me basically to have where this gray and the black meet, that's the 61 retracement. And then the 70 to 78% line is the optimal trade entry in the terms of ICT. So what I'll do here is this is my macro fib retracement, and I'll just extend this OTE outwards, and I'll mark this with a vertical line. That way I know that this is the last macro fib that I have on my chart. From here, we now go to Outback. So we turn on Outback, and what I'll do here is we're trading this on the 15-minute time frame. I'll put on case 1, I'll put the higher time frame on the 1 hour. I'll keep the same Outback RSI settings, and I'm actually going to change my simple moving average to 21 instead of 55. And at this point in time, all we're waiting for is price to come tap or optimal trade entry on our macro fib, and then print an Outback signal. As you can see here, on February 28th around 11 a.m. Chicago time. So UTC -6, as you can see here in the bottom right. And what I would do is, one, either put my stop loss at the recent swing low that we've seen, or I'll put my stop loss the last swing inside of our area. So what you could see in our fib area, you can consider this as a swing or this as a swing. I would consider this, so about 64.77. 64.77. This covers our swing. And then from here, what will we do? Well, personally, I like to try and target either big candle imbalances, which you could see this is our last imbalance here on this entire move that formed this lower low on the micro side of things. And I'll draw the imbalance here so you could see it clearly. You could say that this is candle imbalance as well, but it's slightly tapped into. So I wouldn't consider that. That has been tapped into. And from here, it's about we might get this aura fill, we might not, but we would still be in this trade for it. And so I'm just gonna kind of go over a couple more just so y'all can get an idea of things and just go through all the USD pairs. Starting on the 4 hour, we were going completely down for EU, going completely up, and then now we're going down again. This was broken, but I would say that this was the last higher low to here. As you can see, higher high, and this was the higher low. If you just draw U's, and then you draw inverse U's, if you're going down, it can help you see higher highs, higher lows and lower highs. And so we're going down, making lower lows and lower highs. I would start basically from here. This was the lower high to this lower low. Then this formed, and so technically this was the lower high that was breached. We go lower again. So this was that area. And then from here, we completely flipped around again bullish. I would draw the fib. Technically starting out, it would be here. So this was our first high, and I would just extend this out. If price doesn't at least hit this 61% retracement, I continue to expand the fib until we just continue to get higher highs, or price finally comes down and taps this. Once price comes down and taps this 61.70, it could be at least the 61, it could be lower. Then I lock the fib in place, but until then, I just continue to go up. And as you can see, price never comes down. And so right now for EU, we would need price to come at least all the way down to here to lock the macro fib. If price continues to go up, then we'll just keep expanding this up. If not, we're just sitting right here waiting for this area to be tapped for a potential trade. Now, looking at GU, so looking on the 4 hour time frame, taking this off for a second to make it a little bit easier to see, we were forming, this was the last higher high that formed into this lower low, but it was broken here, so we started forming bearish structure, as you could see here. So this was the last lower low to this lower high. Price came close to breaking this, but it stayed in place and just completely tanked down to that area. So therefore, I drew a fib from the lower high all the way down to the lower low, and I marked the zone for the macro bearish fib on the 4 hour time frame. Just extend that zone out so we could see. So coming to the 50-minute time frame on February 22nd, where we hit our macro 4 hour retracement, I would consider this as a pretty good stop loss. Anywhere between the 21 to 30 range, 21 to 40 range is a pretty good idea for a lot of these. Obviously, it'll depend on what pair. GU moves a lot more than EU and AU per se. And so GU, you might have bigger stop losses than the slower pairs. So it kind of depends on things. But you had a huge move up and prices spiked down. I would have liked to enter it in somewhere around here. I wouldn't say we're entering in late, but we're entering later into this move where we had formed this high here. And so personally for me, I usually like covering this high, but it's too far in my opinion at this point. If we were somewhere around here, yeah, easily cover that. But in this case, I would just cover the recent swing, which we had here. So it's still a 21.5 pip stop loss, and it's completely fine. And personally, like I've stated before, I like to try and target the opposite side of the fib retracement, because while macro, we are bearish on the 4 hour, the micro, we are actually bullish, forming higher highs and higher lows. And so I would start down here and I would just start fibbing the lows to the highs. And if it retraced to the 61, then I don't care about it anymore. And so I'll move on to the next low and I will just continue to do this. And you can see it retraces here, so I don't care about that. And I continue to move all the way until it hasn't retraced yet. And basically, the most recent low that formed this huge uptick to grab into our optimal trade entry zone hasn't been retraced into. And so this would be a pretty easy, safe area to target. You still get about a 1.5 reward, and that's an easy trade to take. You then get another tap into our optimal trade entry zone. Personally, for me, once you get another tap, I look to the first time that price tapped this, and I'll cover that maybe a pip more. So like in this case, 31, maybe I'd go to 32 or 32 and a half. Somewhere around there. And since the first trade grabbed this, you could look to do this again. You only get about a 1.3, or you can cover the recent lows. And by covering the recent lows, I would simply look at the open or the closes of candles. I would cover the bodies, and I would cover the wicks personally. And similarly, whether you entered here, here, or here, entering in all three is a little riskier unless you're like splitting off your risk to see if you get more trades. But you get 3 more taps, you get 3 more signals, and you win all these, which is really nice. I'm looking at NU on the 4-hour time frame. We were completely bullish. We turned bearish, and we had this lower low here into this lower high. Then from there, price completely flipped. We broke this area. We formed bullish trend. Price came and retraced here, and we drew a line. We'll mark this as a vertical line. And so until price breaks here or price breaks down here, we're simply playing this retracement in the micro 15 minute the entire time, right? And so in this instance, we get a complete break of optimal trade entries. So what I will do is say, okay, well, what is the swing? Since we've broken through the optimal trade entry, I'm still treating this as a potential opportunity because we're obviously still bullish until it breaks down here. What will be the last major swing under this optimal trade entry? And so what I'll do is I'll come all the way back here, and there is still this candle imbalance right here. And so I don't want to have to cover it all the way down there. Actually, it's only about a 30, so I would actually cover this imbalance just in case it hasn't been tapped into yet. And as far as a take profit, I would simply look at the last move, and I would look to basically target here. It's about a 1.7, which also makes sense too. We have an imbalance, and inside this imbalance, we've been forming these lows right here. So pretty good area. Now looking at UC had a lot of trade opportunities, and this is a good example of having to adjust a lot of the higher time frame Fibonacci's. So I'm kind of glad UC has been basically doing this. It's been forming higher and higher structure on the 4-hour time frame. So coming here on about February 2nd, 2024, we had a new higher high that barely broke this last one. And so we just draw this fib from here, from the low, all the way up until here. And we draw the zone completely through. Obviously, as you can see, price never comes down to get an entry, which is completely fine. So as you can see here, February 2nd on USD CAD, this was our last higher high, and it slightly broke here. And so we drew our Fibonacci on the 4-hour from the low all the way into the high. And then on February 9th, I have to move this over a little bit, you can see price comes all the way down to reject the 4-hour OTE. So we're going to go to February 9th, and it's a Friday. And so in this case, on this Friday, price comes all the way down to here. Once it comes down to there, then we get an outback signal. And so what I personally would do is I would cover this low and not all the way down here, and I would lose the trade flat out. If you cover this, you're completely fine. But personally for me, like non-biased, I would simply just cover this as a 28 stop loss, and I would lose this trade. And that's completely fine with me. I can't win everything. And so coming back to the 4-hour, this was the last higher high. And so this fib is completely done. It's stuck. And so until it breaks this or this, we're trading the zone, and it doesn't stay here for long. So price breaks here on the 4-hour. So now we're drawing a fib from the low all the way to the high that broke this area. As you can see, we now have this new one, and I marked it with a vertical line. From here, I'll extend out the optimal trade entry zone, the 70 to 78, all the way through, and look for trade opportunities there. So let's go back on the 15-minute to February 9th. And so now this is our new drawn higher time frame macro structure from this high. And so from this case, what I'll do is wait until price comes back to this area, which it does here. So coming to the 50-minute time frame on February 9th, as you could see, our new higher time frame stochastic macro structure is built out. I like to kind of just put the fibs to the side so like all the colors don't get in my way. But I extend out the zone where I'm looking for price to retest and reject on the 50-minute time frame. As you can see here, price completely tanks, reverses all the way down, comes here, basically grabs liquidity from here, and then we get our first potential entry where I'll put my stop loss here. You could look to put your stop loss down here, but this was a pretty quick rejection off of this dump, and so I'd be pretty safe with this 20 stop loss at this point. And this is during late Tokyo, so about 7 p.m. Chicago time. If you are not up around that time, that's okay, because you also, thankfully, get more entries. So in London and basically close to early New York, you get 2 more entries there off of these lines, which is pretty cool. So in this case, we get a complete break of our optimal trade entry, which is still completely fine. And for those who want to be fully in trend on both the macro structure and the micro structure, so basically what I'm saying is if you want to be bullish in both the 4-hour, as you can see here, we're rejecting this, and the 15-minute time frame, you could do something similar to this. And so we get a complete rejection down. We're forming lower lows and lower highs on the 15-minute time frame. This was the last lower high to this lower low. And so we get that rejection. Price basically respects the 4-hour optimal trade entry yet again. And what I would want to see before this entry is that price comes and grabs this structure to reverse into a bullish trend, which it does here. From that point, I'll draw a fib from the low to the high that broke this structure, as you could see here, and then wait for price to come at least to the 61, if not the 70, and reject off of that and close upwards. And so in this case, this is literally the perfect trade that happened about on February 23rd. This is like the perfect setup that I would look for. February 23rd, 2024. You had your reversal of trend, price retrace all the way back to here, and then we got a breakout of the 4-hour zone, and you would just simply enter it here. Now, this would be the aggressive entry. If you're simply following the rules of rejecting the macro optimal trade entry, you can enter in here, or you can basically use this long outback signal as a way of saying this is the outback reversal trend structure. Once it comes back and retraces on this fib and confirms things are going up, like in this case, I enter in here. So either here or here works for you as well. And working off of this, you can continue to do this too. And so from this example, this is our new higher high. As you can see, this fib doesn't have a vertical line because this is a 15-minute fib. So this is a micro fib to the macro fib if you're looking for more trade opportunities within the same pair. And so once price breaks here, you could draw a fib from the low all the way to the high that formed this. And as you could see, price never comes back to the 61. So we're expanding this until price hits that area and locks it in place. Price comes all the way down here, hits the 61, as you could see, and forms another outback signal, which we could take. And it's rinse and repeat. Is the same type of vibe where this is the higher high. We start drawing this fib all the way up to here, from the low all the way to the high that broke this. It never hits the 61. This is our last high that we have. And technically, while this is a 15-minute micro fib, if we look on the 4-hour time frame, we have now formed a higher high. So technically, this is not just a macro, but it's a micro fib. So this fib is pretty interesting to look out for. And this is current time, March. So I extend this bad boy out. All I'm waiting for is price to come into here. If you want to have micro and macro aligned, you wait for the reversal of trend back to bullish side, you play the retracement, you get in. I think UF looks pretty ugly in the sense that we just haven't had a retracement yet. As you could see here, price is completely just gone down. This was our last lower high to this lower low, and so we would start drawing a fib that retrace there, so we don't care about that low anymore. And so this will basically be our low, and we draw this, we don't get the 61, so the fib is literally huge. It's all the way up to here. Well, it was a nice entry, and I'm not going to say that this is the definition. I think ICT calls this breaker blocks. Don't quote me on this. I could be completely wrong. But basically the last lower high, which has been broken in bullish structure, it does a nice job of basically rejecting this as support instead of resistance. You can also see like this big wick and these big wicks here, so maybe consolidate that, and that was pretty good entry just on the 4 hour. Looking at UJ is kind of a similar boat to UF in the sense that we're going completely down, price reversed. And from that reversal, we just haven't had that 61 retracement on the 4 hour time frame. And so we're just kind of waiting forever for that. This doesn't just work for USD. You can use GJ as well. We would draw this area here. Unfortunately, price never came down to that. If you use the 61, if the 61 is good enough for you, like this is where you can personalize it to your own being. Maybe you like 61, you don't like waiting for the 70. Maybe you like the 70, you don't like the 61. But in this case, price gets really close to the 70, doesn't quite get there. Maybe you only worry about the 61. If that's the case, you get an entry, but unfortunately this is during the market rollover at 1600 Chicago time. And so what I would do is I'd wait at least an hour. So this 1645 would close at 1700 when spreads are normalized again, and I'll just cover that low. And ultimately this will be ideal to take off of this trade, so it would be a 4R. But if you don't like holding trades for that long, what I'd said before is you look at previous lows to this drop, which was here. This is a nice fair value gap as well to take, so maybe go slightly under it just to see that this support might be turned into resistance, which we can see that it technically is. And this could be a zone in the future that you look out for see what price does. But this could be a good trade. Maybe you're trying to hold out for that 4R. You're still in profit. You're just holding on to that trade. Even looking exotic, right? This is USD Danish krone. And I spotted this trade, and this was a pretty good idea. What I'm going to go over is how I would trail something. And so I'll do that soon. As you can see, November 28th of last year, we will go there. We get a tap of our 4 hour macro structure, optimal trade entry. Very similar boat. This would technically be an aggressive entry here. Or if you want to wait for both the macro 15 minute to align with the 4 hour, what you would do is you would wait for a price to break this structure here. And then at this point, you can either draw a fib to wait for price to retrace. It retraces and taps the 61 and it comes pretty close. So I mean, I technically would consider that good. And so you're just looking for a nice retracement. And you'll ask, okay, but what's a nice retracement to an okay retracement? Price literally comes and taps the 61. It's close enough in my eyes. And so I would look to enter in somewhere here. It's a little worse, but at least you confirm trend. But let's just say you were aggressive and you got into this point. And where would you look to target? Well, to play it safe, you could look here and just target this and call it a day. 1.7 trade. If you're looking to trail this for a lot further, this is personally what I would do. So we entered this at Tokyo, right? And 24 hours later, we get to 3R and we are breaking previous highs. When we're breaking previous highs, I will look to at least secure something. And that area would be here. So once we're up here, that area will be at this point, which is about a 0.8. And I'll use these highs and lows just to make it easier for me. So once price breaks here, then I'd be more inclined to potentially bring this up. But I would like to see more time here. And I'm just going to use my time because I'm up during New York time. So at the end of the day, price is up at this point. And so I'm comfortable to move my stop loss here. Then go to the next day. Price is going up. It's going up. It's formed a new high here. And so that's a pretty big gap between my stop loss and take profit. And so what I would do is I'd put my stop loss here. And so at this point, it retraces. I'm completely fine. And then we break this area yet again at 9:30 New York time. So I would then bring my stop loss here. You'll start to notice I'm kind of just following structure where once I get this break, I'm just putting my trailing stop loss at the next higher low. Because if it breaks this point, then price is probably going to reverse. I'll consider this the same higher high. I would consider, since it double tops, to probably move it here or move it here. Let's just say I'd move it here. Price then breaks again, and then comes up to here, and then comes up to here later in that time. Once it gets to that point, I'll move my stop loss to this higher low. I'm usually always trying to keep it to, and you'll notice we're at a 9.5 and it's about a 6.5. I like to keep my trail at least around a 3 to 4 difference, and that's why I'm saying at certain times where like, oh, I'll move it here, I won't move it there, because I'm used to prop firm logic of trailing stop losses. Like if you made this much profit and it tanks down, that's actually goes into your daily drawdown. And so I don't like trailing more than 4% because like if it reverses, then I'll technically lose the account for a lot of these institutions, unfortunately. But you get a double top here and a double top here, but I'm sleeping at this time, so my stop loss is still down here. And price comes all the way up to this point. Once it comes up to that point, what I would do is I'll put my trailing stop loss here. And so from here, we get another double tap, and this is technically our new high here. I would consider putting here or putting it here, but for a conservative side of things, I'd probably just move it up a little bit. And at this point in time, on December 7th, I would get stopped out of my trail. So at that point in time, it would be about an 8.5 R. And that's an 8.5 R trailing for 8 days. So even if you trade the 15-minute, use a 4-hour bias, like in 8 days, that's, if you're risking 1%, that's 8%. You might not be risking 1%, but ultimately what you can have from Outback is multiple options, and it comes down to personal preference, right? So if you prefer just looking at one pair, then maybe you're risking that 1%, maybe 1.5%, 2% if you don't get that many trades. But if you preferably want to see more trade opportunities happen, you're looking at 3 or 4 pairs, then I would consider 0.5 to 1% depending on your risk. You can make a good amount of reward from these trades. You have to wait a good while to take said trades, but you have some good opportunities. You had a huge move up to here. Price comes back. So yeah, so we never break this low here. So going back to probably December. Yeah, going back into December, right? We have this area. And so if you're looking to be macro and micro bullish, in this case, you wouldn't take this trade. You would have need this to break. You would take it here, but you wouldn't have taken here depending on what you see as the lower lows and lower highs in this case. I would consider this as the lower high. So price needs to break that. You would draw this fib. And so unfortunately in this case, you get a nice retracement. You might enter this buy and you get wiped out and you lose, right? It is what it is. And so similar case here is you're waiting for that macro and micro bullish sentiment. This is our optimal trade entry on the 4-hour. Price dips below here. We get an opportunity to enter a trade, but this is our lower high to this lower low. So price needs to break this. I'll draw this to make it easy. So this is our lower high to this lower low that forms from this one. So this is our lower low to lower low, lower high. We get an entry to go long, but we want to be micro bullish as well. And so once this breaks, we fib from the high and the low. Price comes, grabs this, and so you can literally enter in here, cover the low, and then from there, the world is your oyster at this point, right? I would just fib the entire opposite move. As you've seen before, this fib retraces here, this fib retraces there, this retraces that, and then we're basically here. I'm going to make this a little bigger so it's more accurate. So we're basically there at that point where that's our high and our low was never tapped. So this would be a potential target. And as you can see, it almost completely reacts from that too. So in 8 days, that's like 8% trail. And this is a pretty easy trail because price only goes up here. I've never technically traded this USD Danish krone. It is technically an exotic pair. But as you can see, even exotic pairs act normal like major and minor pairs too. And price hasn't come back to this point yet, but we're still playing off of this entire fib because we haven't broken the top or the bottom. So maybe price comes back and triple bottoms here and gives another buyish entry there. I would say this would work for indices as well, but indices has been looking more of a crypto token than an actual US indices. Price has only been going up. You've been forming higher highs and higher lows. In this case, on January 31st, all the way up until February, about mid-February, we had a new higher high that formed that we fibbed it out and we drew out our zone here. We can mark this as our macro fib and we draw out our optimal trade entry all the way out. And it got a tap on February 20th on the 15-minute time frame. So we can actually just scroll through. Pretty close. You can see here we lose the first trade, but yet again, this depends if you want to be macro and micro bullish. We don't get a break of this lower high until after this signal print, so you technically wouldn't have taken this entry until here. Well, not even until there because we didn't even break. So until here, you still lose the trade anyway. And then we get another break into the optimal trading trade on the 4 hour. This is our last signal. We covered the low that just formed, and price has only gone up ever since. We had a new higher high that formed, and so we'll go on the 4 hour. And from this case, we would now be from here all the way to here. So we would look at this high, it doesn't come back to the 61, so we would be here. That's that. So let's break this down. This was a long video, and let's just kind of wrap this all up in a summary. So in this example, step 1, choose a higher time frame. Daily, 4 hour, 1 hour, 2 hour, 3 hour, does not matter. Just choose one and stick to it. Since in this case, we're trading case 1 Outback 15-minute trading time frame, 1 hour higher time frame, it would make more sense to be on the 4 hour. If we're trading 5-minute time frame, 15 higher time frame stochastic, then maybe the 1 hour structure might make sense. But since we're doing 15-minute, 1 hour combination with case 1 Outback, we're using the 4 hour as structure, marking highs and lows. Once we've seen a break of higher highs or higher lows, we draw the fib out. We draw the fib out until it sticks. Once it sticks, aka once it hits at least the 61, then we're set in stone. Preferably, we want to see it come to this 70 to 78 range. Tap that on the macro 4 hour when we're trading the 15-minute. And from there, we drop down to the 50-minute time frame. And if you want to be bullish on the micro 15 and the macro 4 hour, then we wait for the same exact thing, market structure, drawing out a fib on the retracement, see an Outback signal, and take that trade. If we get the Outback signal before we get the market structure shift, then we could just treat that as that entire fib reversal on the structure is our Outback signal. We're just waiting for that retracement on the fib down. Now, if we don't get that, if we get the Outback signal after, aka when it's retracing like this point or these points, then we could just simply take that trade then. But hopefully this helps you. And as always, if you have any questions, feel free to jump into the Outback channel. We're always there. And happy trading. Peace.